First of all, good evening, everyone. I'll let some of you guys join in as the numbers keep on going up. Uh, and in the meanwhile, what we'll try to do is we'll try to go live on Facebook as well. Awesome. Perfect. So there are a few people now. I think I can start. First of all, everyone who's joined in now, thank you for joining us on Saturday evening. I know everyone's going to be in a different part of the city, in the country itself, and it's a nice day over here in Delhi. So thank you for joining in. A quick intro before I start. I'm Nishchay Pradhan, and welcome to Reverse Pitch. That's the first thing which I have to say. Um, I am one of the founding partners of this company called Favcy, which is the organizer for Reverse Pitch. The idea with Reverse Pitch is very simple. It's to demystify startup funding as much as we can for the entrepreneurs and the founders which are there. What we plan to do is it's a series where we focus on one investment company which is there, either an angel investor, VC, whoever it is. We bring them onto the panel over here, and what we do is we sort of ask them to explain their thesis. How do they go about picking up companies, and of course have a Q&A round of questions with these guys as well. And as Favcy, I think we're a venture building company that co-builds products with idea stage founders, and we sort of help them get their ideas up and running. So if you guys are starting out and you're planning to start out and you want us to evaluate and validate your idea, please send me a message across during this time, or you can go to our website and you can reach out to us. We're more than happy to look into your idea, evaluate the idea, and I mean, if everything goes according to plan, happy to fund and co-build that product along with you guys itself. So thank you again for joining us. Today, as most of you guys would know, we have Pratip Mazumdar, who's joining in from Inflexor Ventures. He's a partner over there. We also have Rahul. Rahul is works with Hunch Ventures and has been a strong proponent of the startup scene, and has been in the ecosystem for quite some while. And he's actually worked with a lot of startups which have been either been sold across, and he's particularly very very well suited for a conversation on SaaS itself. So we have him over here. He'll be doing a fireside chat with Pratip later in while during the session itself. So what I'll do is I'll take some time and I will talk about how the structure is going to go for the session today. So the first, I think, chat is going to be with Pratip itself. Pratip will be introducing himself. He will also be talking about Inflexor and Parampara a bit, and he'll be touching on what his outlooks are and what these theses are and how do they typically look at selecting companies onto the portfolio itself. Then what we have is Rahul will be joining in with a set of questions that he's prepped for, and he'll be asking Pratip these questions itself. The last section is where I open it up to the audience to ask their questions. So Piyush, who's also on the call over here, he'll be sending you guys a message across with a WhatsApp group link. Please join that group. That group is where you can ask your questions directly to Pratip when the audience questions Q&A about, right? And I'll be moderating and be getting you onto the panel over here. So that's about it from me. Pratip sir, it's over to you.
Hi, thank you, Mr. Good evening to everybody who's attending this session. Thanks for Nishchay for hosting me, and also for Rahul to have a chat with me on, on in general about the startup ecosystem. I'll just give a quick background about myself. I've been on the investing side for the past 15 plus year, mostly looking into investing. Earlier, I used to be on the private equity and buyout side. Healthcare, logistics are some of the sectors that I have worked very closely with. Have been always investing in India since 2006. Deployed almost $350 million across 8-9 companies. Exited quite a few of them, either through M&A transactions or cross-border transactions. 5 years back, I got associated with my other partners and co-founders at Inflexor, Jatin and Venkat, who had founded the first fund called Parampara Early Stage Opportunities Fund. And since then, I have been working with them. I used to, earlier be on the LP side of the fund and have worked with Jatin and Venkat in the first fund. And very recently, we launched a second fund called Inflexor Technology Fund. So, Jatin and Venkat have been technology entrepreneurs, and they have been working together since the last 20 plus years. They have built, scaled, and sold 3 companies in 3 different sectors: fintech, healthcare, energy storage, and they have sold those ventures to strategic international entities. And they have been and are entrepreneurs at heart. So in the first fund, it was a small $14-15 million fund. The thesis was to come in at a pre-series A, series A level, bet on companies which had some differentiation, innovation, and IP built into their product proposition, and help them scale and take them overseas. So our typical playbook is you come in early, work with the founders, and as and when they deliver, you go, you further invest into those companies, eventually take their product and the company overseas, be it in Southeast Asia or in the US markets, and you scale there and then eventually exit after a few years. So that's the typical playbook which Jatin Venkat, they have done earlier in their entrepreneurial life, and we have been doing it fairly successfully in our first fund as well. We are completely sector agnostic, right? And some of our key learnings from our first fund, we have taken it over to our second fund, which is the Inflexor Technology Fund. The Inflexor Technology Fund is essentially $100 million fund, right? In the first fund, we used to come in early, write $500,000 check, going up to $1 million, $1.5 million. In the second fund, though we will come in early, but we will have the ability to write up to $3-4 million check size over the with follow-ons over the investment life cycle. Typically, from the second fund, we are going to invest around 20 odd companies, right? The theme and thesis remains the same. We are IP, innovation, deep tech focused fund, focusing on enterprise businesses or B2B businesses. We stay away from direct B2C businesses. Nothing wrong in those businesses. It's just that we think our skill sets, our approach, our experience is more towards on the deep tech innovation side, and we are happy to play to our strengths, right? And we are not looking at building out a portfolio of 30-40 companies, because we feel when you bet on a company, your conviction levels should be high enough and you give all your energies and effort into it. So in the first fund, we had 12 companies spread across cybersecurity, edutech, AR/VR, clean tech, deep learning, machine learning companies, and a space tech company. Likewise, in the second fund, we will do at best around 20-22 odd companies max, right? So that our efforts are concentrated on a select bunch of founders and companies with whom we would like to grow and scale over a period of time. That's essentially the thesis of the second fund, right? And currently, we are meeting a lot of founders and people through our network and evaluating transactions in that same space. So that's in a nutshell about my background and what we have been doing at Parampara at our first fund, and as well as at our second fund, Inflexor Technology Fund.
Awesome. Thanks for that, Pratip. I think Rahul, I think it's time for your session to start now. I think you have particular questions for Pratip.
Yes. And very glad to have Pratip over here and give me this opportunity to ask you some questions. Having been on the startup side of things, I've often found myself in a place through my career where I wanted a VC to answer certain questions, and I'm glad I have you here to ask this audience. So you were just mentioning your 2 funds, Inflexor and Parampara. Inflexor, through the first fund, has invested in startups like Shifu and Velu, etc. What is the common attribute that you saw in all these companies in that allowed you to establish that these are the ones that you want?
So, you know, two, three common themes which play across our entire portfolio. Uh, our founders, right, which is on whom you actually bet the entire story all about, right. Number two, essentially, is each of the products which each of these companies are developing, they are highly innovative and they are differentiated and to a greater extent. So even when we come in, our focus essentially has been they should have some paying clients so that you know whether it is a good to have product or a must have products, right. So each of these companies had around maybe 10-20 lakhs of revenue per month at the time when we came in, and the problem or the pain that they were solving for their end consumers, right, or end customers were real, and that's the feedback we have consistently got across the board for each of the companies that we have selected.
Sure, sure. One of the things that you mentioned just when you were speaking was that you usually went after this a select group of founders. Like you'd really focus a lot on the founders. Do you also look at the internal dynamics between the teams? Like it might be individually great people, but you also do a little bit of focus. And if so, how do you guys go about evaluating?
So absolutely. So some of our key learnings, not from just the first fund business, but in our prior experience, because Jatin Venkat, each of them come with a 25 years experience, both cross border and India, and same 15 odd years with me. So overall, what we have realized is when you are building and scaling up a early stage company, we would want to focus on companies where there are at least 2 or 3 founders. May not be 1 or may not be 4, or excess of 4. Very rarely we back where there are in excess of 3 founders. One is too much of risk. 2, 3, it's just the right size, right? That's one. And there's just so much to do. I mean, you coming from the operating side and have been working with startups all through your life, Rahul, you would know every day there's a firefight, and you need to have people with complementary skills whom you can trust with your life, saying, okay, look, if I've given it to them, they can run with it. I did not bother about it. I did not get it wet. And that kind of chemistry comes from people knowing each other, working together for a certain period of time. So in our portfolio, we have a bunch of founders uh, who don't have prior entrepreneurial experience, but at least also 2/3 of the founder have prior entrepreneurial experience or business level experience in some form and manner. And each of those founders or the group of founders in each of these companies, their paths have crossed sometime at some point in their life where both of them or 2 of them or 3 of them have worked together, be it in their college, school, early education days, early, work experience where, people went in different ways and then they came back after 10 years saying, let's do something on it. So there is a bit of history and chemistry to it, right? And there is a sense of fairness which each of them lend to themselves, right? Because one of the key things that we focus on is, okay, are the guys fair to each other? If they're fair to each other, they will be fair to all the team below and to their investors and so on and so forth. So you need to delve, interact with them, speak with them, know about their history, their past, to get a right sense for it.
Okay, great, great. I'll ask you a quick question here. So, often in the quest to find great founders, we come across ideas or products or services that are just the right timing, right? They're just things that are hitting at the peak of the phenomenon. When such a product idea or a service comes across, right, and maybe the founding team is iffy, right? So you have to choose between a strong founder versus great timing. How do you guys make that choice? Which one then becomes more critical?
By far, at any point of time, irrespective founders,
Okay.
because it's always good to focus on things in your control.
Yeah.
Choosing a founder is in my control. Timing is not. And, and history has taught us through multiple economic cycle, timing comes and goes, founders remain the same. If you have the right pedigree of founders, even during difficult circumstances, they will come out, with guns blazing. So that goes without saying, right? Because in the end, from a fund perspective, when you are investing in a company with a group of founders, one has to be very clearly aware that when you are raising capital, be it from a venture fund, PE fund, or any other fund per se, an institutional setup, they are transient capital, right? They come in and go. That's the nature of the beast, right? We get to enter businesses with the objective of making an exit happen, right? And over a period of time, when it will happen, it's not under your control, but the objective is to do it within a finite period of time. And timing may or may not be in your control, right? But founders, if you've chosen them, you're as partners, right? They will work with you to ensure as a transient capital you can move on. So that becomes very critical.
Great, thank you. One of the things I did want to ask here is a lot of these theses that we developed as individuals or you as a fund would have evolved because you had some takeaways or learnings over your time, right? Over your time setting up the first fund and some of these things. What were some of the key takeaways and learnings along with this focus on founders that you've had after setting up your first fund?
Sure. So, what essential, other than the founders, what essentially is the key, as I mentioned briefly earlier, we are a pre-Series A, Series A kind of a fund, right? We do take very selective pre-revenue bets, right? But we are very selective about it. In our first fund, we have just one bet, which is on the pre-revenue side, because where we think the risk-reward ratio is disproportionately skewed, right? So it's in our favor. But as I said, we focus on companies where there are at least some paying clients. They have a working product. The product needs to be further finished or scaled up, or the tech architecture on for the next version rollout needs to happen. But at least some of the customer have adopted the product, and there are POCs underway which are working. Right? So it's very critical for us to look into businesses and companies where you have at least 5, 10, 15, 20 lakhs of monthly revenues and some paying clients. That things becomes very useful. And on the technical side as well, both my colleagues, Venkat, Jatin, they are technopreneurs, right? They still love coding. They get into the depth of things. So that is one of our key strengths when we are evaluating a company to deep dive into the technology. We do a tech demo, the tech stack workings. We meet with the tech team next to the founders, and we get an assessment of how good the innovation or the tech is, right? That's the third aspect that we deep dive into, right? And we do it all in house with our capabilities which are there. That also becomes very clear, so that we can clearly distinguish even between similar type of founders or set of founders, which product we think or what are the issues potentially one could have, right at the early stage. And that comes from experience, right? Of, building and scaling companies since 2002, 2006, 2010, 2014, across economic cycles, we have done it as a team. And, both in US as well as in India in multiple sectors. So that sense of that judgment comes from, engaging very early on.
So thank you. That was a very good insight. One of the things that I've also realized is both on this side of the table, sitting as an investor and also being on the startup side of the table, a lot of people talk about the relevance and differentiation of the idea as the two critical elements for success. And what is your particular take on this subject? The talk of relevance versus differentiation of an idea.
So I would give greater weightage to relevance and how important or critical problem that particular product is solving over differentiation, right? So it is very important to have a great product which is actually solving a great pain point, right, for the customer. So that relevance is paramount, right? From a differentiation, there might be two people or two set of individuals or companies or maybe multiple set of people trying to solve the same problem. In the end, what differentiates them is their execution capabilities. No matter how great your product is, if you don't execute well, right? In the end, and that's the time when rubber meets the road, right? And the difference where things stand. So it's very important to get the relevance right, and the differentiation is taken care by the promoter, the founder pedigree, and their capability. So that's where we bet on.
Great, great. It's funny that a couple of things that you mentioned, this focus on B2B companies, right? This is a fairly recent phenomenon, because I remember in our early days at Nowfloats, our founders were four, right? So we obviously had that stigma where we had to carry four founders going and sitting in front of investors, trying to convince that this is the right for it. But we were also in the B2B space, and this was just around time when all the B2C companies, including some people who were marked as competitors like Grofers and so on, had come into the picture, and B2C funding was taking off in a big way. Nowadays, a lot more focus has come back to the B2B2C model, right? Which is something that your fund also focuses on, right? How do you see this evolution happening, at least the history of it, and now going forward into the next 10 years? And what are the opportunities that are going to come up?
Sure, great question. Essentially, if you see, India has been a consumer-oriented country, right? So the mindset has been to focus on direct-to-consumer, and stuff, right? So even if you see the listed market space, right, if people follow, you will realize consumer companies are traded at a very different multiples versus an enterprise or a SaaS company. Whereas in US, it's a very different ballgame altogether, right? So it's the nature of the beast. It's the local mindset which prevails and will continue to prevail. You can't take away the fact. So when Jatin and Venkat started the first fund in 2014-15, right, when they started the initial work on the fund, this was the same concern they encountered with each and every investor meetings. But again, they have seen multiple economic cycles. They knew how enterprise plays out after built and sold companies in the US and then in India. So we knew this is our core strength, and we need to focus on our core strength, irrespective of what market thinks and does. Right? As long as you stick to your core competency and your focus, you will definitely do well. Having said that, over a period of last 5-6 years, since you said from the time you guys were at Nowfloats in 2012, 14, and thereabouts, in the Indian ecosystem, things have also changed a bit. A lot of funding, as expected, has gone on to the consumer side, right? And however, a lot of those ideas or capital have, for whatever reason, good or bad, have gone down the drain. Some great ventures have come out of it as well, right? But again, it's a completely different ball game of playing the direct to consumer game. You need a different skill set, capability, muscle power, ability to burn cash over a longer period of time, right? So that's where things are. So people have been looking at ways and means how to, do things in a much better way. And enterprise is a very big market, which in India people have hardly focused on. Essentially, in the last 5 years, if my memory serves me right, the number of B2B companies or enterprise companies coming out of India or starting up have grown at the rate of almost 20-25% CAGR over the last 4-5 years. And as things stands today, at least in excess of 1/3 of the companies are in the enterprise space, and going forward over the next 3-4 years, I would presume it will be fair to say that at least every year, if there is a bunch of companies who are starting, at least 50% of those will be enterprise level companies, right? So the sales cycles are in general longer and all, but at the same time, they can become sticky. You can have a recurring, revenue model, and in times as these, like the COVID times, they tend to do reasonably better. History has shown, if you look at the US venture ecosystem and the market and their history over the last 20-25 years, you would realize that the enterprise and the SaaS businesses have done exceedingly well during and after a recession, right? And we are not talking about Indian history, we are talking about US history, which has a fairly credible amount of venture investment over the last 3 decades. So that's a fairly long time to see and go through, right? And the same thing is being currently also played out. So the next bunch of companies who come out during this tough times from India on the enterprise side will be the companies to watch out for sure. So we are highly upbeat about it, right? And hence, from a second fund perspective, our fund size is larger, our focus still remains the same, and we are happy to do what we do best.
Yeah. I'm personally the B2B2C model is something that I have myself put a lot of focus on over the years, and I think it's the next big phenomenon we are seeing. And if you look at, so I have this idea of joy in products, right? That there are certain companies that truly infuse their products with joy. And if you look at Freshworks' portfolio, and they're a B2B company, they have some of the best benchmark UI among all the Indian companies that they are. And it's the B2B companies that are leading the way over here. And it's quite cool to see. I'm adapting Zoho to a company right now. And Zoho, again, has tremendously upped their game now that they know that they're at a global level. Right, so it's quite cool. But what's interesting is you mentioning COVID. I mean, it was what's on our minds. I was listening to an Axel podcast recently where the guest said, "Please buy my book, but don't buy it on Amazon. Right? Please go to the local bookstore where it will be available. To wait a couple of weeks, and my book is going to be available at your local bookstore. Please support the local bookstores." So what are some? And I thought that was quite cool, right? It certainly pushed me to keep buying stuff from my local grocery store rather than Amazon. But like that kind of impact, what do you think the positive outcomes and impact on the ecosystem right now, whether it be in terms of business or culture? What are the positive sides that are going to come out of this whole COVID?
I think the biggest positive side, which should definitely come, right, is appreciation and respect for being capital efficient. Whether you're building an enterprise business or a consumer business, that's paramount. Keeping your fixed costs low and focusing on capital efficiency, right? All great businesses, even a local kirana guy, the best thing that he does is to negotiate his lease rental. Because for him, for the local kirana guy, the lease rental is the biggest cost, right, on a per square feet basis. So I think the biggest positive which will come out of this entire COVID scenario is company trying to focus and figure out how to be much more capital efficient and respect capital to a greater extent, across the board, irrespective of sector, space, so on and so forth.
Okay, so I'll now ask you a very relevant question for many of the people on the call. This is often people get on webinars to get this exact answer. As a VC, what is the usual check size that you have? What has been the highest and what's been the lowest? And
So
what
from the
stage of the company?
Sure. So for the first fund, maybe we wrote 250K was the smallest, and 1.5 million was the highest from the first fund, which is completely deployed. From the second fund, again we will our sweet spot will be around 300 to 400K as the smallest or the first check size, going up to all the way up to $4 million, right? So we would want to come in, lead the round when the first round is happening, right? Or we might be the only institutional investors initially, which is fine with us, right? And then as things perform, we continue to write checks as the company grows. So in fact, in the first fund, among all our companies put together, besides the $14 million or $15 million we have invested across the 12 companies, subsequently another $75 million of capital of either other investors, follow-on investors, or some of our LPs have gone into those same set of companies because they have executed their plan so well and they have scaled to a very great extent.
Very nice, very nice. Nishay, do we have time for one more question, or should we open up for audience?
Please go ahead. I mean, I think we have time. So
Okay. Great, great. So one of the things, Pratip, that you had said was that you specifically help determine the overseas expansion strategy of
Yeah.
companies. Earlier you were speaking. What is the markets that are most synergistic to a company that has evolved in India? What is it that you usually direct in terms of advice and strategy for companies that are looking to expand overseas?
Sure. So again, these are all personal learnings. That's where the VC teams, partners, strengths come into the picture, right? In our case, both Jatin Venkat have been, overseas built, so having their companies. Here, the key learning has been any overseas market you take, be it Southeast Asia. The typical journey that a Indian company follows is India, Middle East, or Southeast Asia, and then eventually it will be developed market, right? In our first fund, we have a bunch of companies who followed the same trajectory, but we also have companies like Entropic, Fu, right? Who from being an India company selling in India directly went to the North America, Europe market, and have been tremendously successful there as well, right? So the key thing to focus in this entire segment is the overseas market, be the developed market in Southeast Asia, Middle East, or Europe and US. They are extremely quality conscious. So an Indian company who has built a product and a business in India needs to get their product quality up there, right? You can't afford to get wrong on your quality side, on your performance side in the overseas market. Pricing is not much of an issue. The overseas market clients, if your product is good and you are, and really differentiated, clients are happy to pay top dollars, but they will be ruthless when it comes to quality, and they will never give you even a single recommendation for your subsequent sale. So it's very critical to get your quality aspects sorted out in India itself, where the challenge essentially is in the Indian market. Ability to pay might be there, but willingness to pay is not there. You have limited pricing power on your enterprise products and companies, and hence you have to, for all product companies on the enterprise B2B side, you need to go in the overseas market, right, to get the best value for your buck that you have invested in. So get the quality right and go out in the overseas market and try to scale up your company there.
Okay. I have a couple more questions.
Sure.
One of them specifically relevant to your personal takeaways. Often, asking you to pick like a favorite company or something is like asking to pick a favorite child. But what are some really great experiences you've had in associating with various startups in the ecosystem that you work with and so on? What is a story that you find to be truly motivating for some of the people who might be on the call?
So, some of the, great founders, even within in our portfolio as well, from a learning perspective, people should understand, not every business is investable by a VC, right? It is very critical to differentiate the type and quality of capital that you are taking on your cap table very early on. And HNI money, great network, individual network person's money versus an institutional capital, they are of different flavors. So one of the key learning is the companies and all which exceedingly do well over a period of time. You will realize the one trend that they typically follow is the initial capital that they draw, right? They are one should be finicky about that, right? As founders, right? First of all, should you take external capital or not is a question that you need to think 10 times about, maybe 100 times about. Once you have decided to onboard external capital, the quality of capital that comes into plays a huge role, right, over the next 5-10 years, and makes a real differentiation to the journey of the founder and the company.
Thank you. That's quite good to know. One of the learnings I've had is that a startup often, when they're starting out, don't quite in India specifically, don't quite focus on the self-serve bits of their scaling. This is in a both in a B2B and a B2C market. And so for whenever I have worked with a startup, one of the first blind spots that I look into is how have they built out their documentation? How is their product marketing strategy coming up? And this is my own hypothesis, right? This is something that I have come to learn, that these are the things that startup founders often ignore while during their growth. In your experience, what are some aspects, crucial aspects that early stage and idea stage founders ignore that if they didn't would actually make a much better case for a VC like you to be interested?
So quite a few stuff actually, right? Because in the end, anybody who's starting up is learning, right? And you have fitting priorities at all points of time. So it's always not fair to say, look, you haven't done this, you haven't done that, right? Having said that, keeping that aspect aside, whenever 2-3 people are starting up together, it's very important to have the founders agreement in place. We might be great friends for 20 years and starting up a business. Irrespective of that, having the founders agreement in place, because life is uncertain, don't know always, how relationships go. It's always good to have a clean exit path and less conflicting path, and everybody's expectation is set up right, upfront. And many a times there are many unsaid things between people, but when you put those things in the founders agreement and when you write things become much more clearer. So that's one very important thing, having a founders agreement in place. People often ignore that. Second, having a whole bunch of angel investors very early on, like 5, 10, 15, 20, 25. Because as founders, one of the key learnings should be, very honestly, as a founder, your job should be to build a business, focus on business. And okay, look, I need to raise capital, right? But if raising capital takes disproportionate amount of time and managing the providers of those capital takes even more longer period of time, that means your allocation on time is completely misplaced, right? So one has to focus on that as well. I don't hold anybody to ransom on that, because in the end, you would want to take money from people who are giving you at a critical juncture, right? But it's always good to pause at that point of time and reflect, because it has a long-term impact. How much time and resource it takes from you, you will never know unless you get into a relationship of that sort. Number 3 is essentially, as you rightly said, getting some of the secretarial and compliance work and paperwork in progress and keeping them up to date. We often ignore that, right? Even if I say there will be some things which will fall through the cracks or will not be priority. The reason one has to focus on that is, look, as long as you are running your own ship, it's okay. You move on, you manage stuff. When you take external, especially institutional capital, before institutional capital comes in, there are checks and balances. They would want all your secretarial and other compliance to be in place. So at that critical juncture, every delay of a day in getting capital in your company bleeds you dry. And because of procedural and compliance reason, you might realize even if the documentation is fully done, signed, by the time the money comes into the bank, it's almost a month, 2-month period goes away. And people don't factor that when they plan their, that year's business plan, or do all kind of, plan B, plan C analysis. And those are, these are, basic stuff, the founders agreement, the cap table, and the secretarial thing, but they are very critical. They create a lot of pain points and friction at a very, time situation.
Great, great. Thank you very much. I think that concludes the moderator part of the session, or at least moderator directly asking the questions. I think we would want still to have a moderator so that we have order. But now I think the audience questions can.
Awesome. So, Pratip, I have some beautiful questions by the audience, which are directed towards you. Just for the audience who's here, I just wanted to say that we are sending a link across. Piyush is sending a link across to you for a WhatsApp group if you want to ask your questions. Join under that group and just ask your questions that you want to ask. Pratip will also be joining us later inside that group and will be taking questions which possibly were not asked during the session itself. But that being said, we have a first question by Sarthi Sood. Sarthi, you're online now. You can unmute yourself and ask your question. Introduce yourself and ask your question. Sarthi? Okay, I've given him permission. He's not being able to join in. I think that would be a problem. Okay, so what I'll do is, in the meanwhile, what I'll do is I'll just read out his question because he's given me the question over here. So he's from Solan, Himachal Pradesh. He's currently in his second year BTech course that he's going through, and he wanted to ask that he wanted to understand the process of applying for investments, right? And particularly with Inflexor, right? So he wanted to understand that process, and he wanted to see that if he has an idea on app based idea which is at an ideation level, um, what should he do? And I mean, of course he's asking, will you invest in if you like the idea itself?
So it's great to actually know. Okay, in the second year he's thinking about setting up a company or building a business. That speaks volume about the level of entrepreneurship that is going on in this country currently, right? And there is capital that people are willing to take. So at a fund level, we don't back idea stage investments, right? However, the question is how should he go about doing it? So if you have an idea, it's very important for him to bootstrap and build that idea into an app without getting external help, and do it himself, right? And build the crude product and test it within maybe his hostel community or his college community, whatever solution he's trying to provide, to see whether people will use and adapt that product, and he will get useful feedback from the early users, right? And then take those learnings and improvise and use it as a feedback loop to further scale. And that should typically take at least couple of years for him to, by the time he passes out, he will have a much clearer picture of where that product can go, and then he should deep dive full time into
All right, perfect. I will take the next question, which is from Ashim. Ashim, I'm just getting you online. Ashim, now you're online. Just introduce yourself and ask your question across to Pratip.
Hey, hi, Pratip. This is Ashim, seasoned entrepreneur. Uh, Spent time building scale businesses, and kind of right now back on the drawing board. One of the things that you mentioned during your call, during your conversation was that, obviously a lot of enterprise businesses are here to sort of uh, come and people are trying to build early stage startups to build for enterprise. The conundrum there is that, while having been in the business long enough, the large enterprises are still very wary of working with early stage startups and their technologies. And the one thing that I've sort of come to realize is that, the decision makers there don't want to stick out their neck to partner with an early stage startup because they obviously don't necessarily know, how the startup is going to shape up. And therefore, they always end up taking the easy route of partnering with the traditional, the Oracles and the SAPs of the world, and find ways to work with them versus early stage startups. So, what are your thoughts on that? How do you think that that's changing, especially in a country like India?
So, very valid question for an enterprise startup. Sales cycles are unusually longer, and even if you make the sales, even if your client has the ability to pay, they typically take 2, 3, 4 months to pay your dues, right? That's the nature of the Indian market. But at the same time, you are starting out your business in India itself, right? Uh, so one of the ways in some of the companies who improvise it is to work with, if you're targeting a customer X, there might be already some of their other vendors who are providing technology and other services to your customer X. You need to figure out, is there a way to align on certain case specific basis with such vendors or X people who are already empaneled and embedded into your customer's system, and then you go and pitch to that guy, right? Okay, look, this is what my product is. You take me inside this company, it will be a great value add. You currently are not offering him. My product is priced at X. With my margin, it is 2X. I'm happy to take that. You can mark it up how much ever you want, because it's very essential to get some very good names on the customer side on your, on your pitch book, so that you get good references about your product. And that's one of the things which quite a few of the founders have been doing, and it has been working well for us as well. We have seen it in the past and even in the current portfolio.
Great, thank you.
I was on mute again. So we have a question from Pratik Singh, who's asking a very particular question, I think, which is a pain point for a lot of entrepreneurs also, specifically the non-tech founders itself. Pratik, you're online right now. You can unmute yourself.
Hi, yes. Hello, am I audible?
Yes, you
Yeah,
are.
Pratik, you are.
Yeah, so basically I had an idea like with my my friend, and we are about to start it, but we are looking for a CTO or like a technical background person, like who has good knowledge of website website designing and web apps basically. So like how can I find those, and like how can I trust them that yes, they will stay with me with their
So, great question, right? Essentially,
like I have no tech background, like I have no knowledge about coding and all. So
correct.
yeah,
So, it's very, uh, getting a co-founder is like getting married, right? You need to have good references, right? So you need to look back, deep dive into your, college circle, in your extended family network circle, and get the word around. Okay, look, you are looking for such kind of people, and rest be assured, once you do that enough, there will be people whom you will meet, right? And not necessarily the first person you meet you need to select, or both need to select each other, right? Over a period of interaction, you will come to know of what you like, what you don't like, and with whom you get along. And so it's a process, right? It's more of an art than a science, finding a co-founder. And once you have found that person, it's very important to set expectations right at both ends, right? Maybe start up working on a temporary basic on a small assignment or a project together, right? uh, without expecting any economics from each other, so that not only you are able to gauge that person's interest and his competency, the other person is also able to do the so for you, right? And that inherently, when you work with that person without any commercial motive, that leaves the first founding block for building trust, whether you can trust that person to do that job or he can trust you, vice versa. uh, you know so it's a learning process. You need to follow these things and you know make your feet wet to figure out, but you need to go out and meet as many people as possible from various network alumni circles. You can, right, speak to your friends and say, okay, look, this is the technical background of a person I'm looking for, can you help me reach out to some people? When you say it to 10 people and they say it to another 10 people, automatically the word spreads.
In fact, Pratik, I'll also come in here a little bit. So there are two parts to the question. So I think there's a long-term CTO which is always needed, right? So that's one. I think the other aspect of the whole question is to get started. So there are companies like mine, right? So for example, Favcy is a venture builder which looks into just getting the technical or the digital products out with the non-tech entrepreneurs itself, right? So we sort of build that first go-to-market product that you need to scale actually, and yeah, I mean, so that's the first part. But at the end of the day, while you're still scaling as a business, and I think that's why Pratik was also coming in, that you really need to actually talk to a lot of people. It's a marriage, right? Typically you can have a solution, you can get the company up and running, maybe you can attract some investments because of how you're running the company and the execution side of it. But eventually where it comes down to is you would need a CTO also. And I think that's where I mean, we can work as a conduit, as a solution for a short term, medium term. But I think at a larger term, when investors and institutional investors come in, typically they would also like to see like a CTO along with it. So I mean, as a service, I think at some level you would definitely need to get a CTO. Uh, Maybe not to start with, but I mean, more than happy to if you're ready with the idea, more than happy to take a quick evaluation look over that, and if everything goes according to plan, I mean, we can help you build that product also.
Sure, that would be great, and I'll contact you after this.
Perfect, Pradeep. Take care. We
Thank
have
you.
our next question also, which is by Ankush. Ankush, you're online now. You can
Yes, sir. Yeah, yeah. Yes, sir.
please ask your question. Please introduce yourself and ask your question.
Yeah, sir. I'm Ankush Mittal from Panipat. Sir, I have a question regarding that. I have an idea, but I don't have any kind of friend of mine or any other person who is supporting me. Or so, how can I find an entrepreneur or a person who can back me up or who can help me up in starting up that idea or starting up a company on idea which I'm seeking? So how can I find that kind of people?
So, Ankush, it's very important, and an entrepreneur has to be resourceful and has to hustle, right? As you call, you need to be Atmanirbhar, right? Irrespective, you might be the only guy, but you have to only find the solutions to it, right? Most companies, when they start out from an idea and all, they themselves are the tech guy, they themselves are the marketing guy, the sales guy, and the back office and the customer service guys, right? Uh, you when you have an idea and you are starting out, you need to figure out what are the basic things that has to be done, and you need to do it yourself, right?
Okay.
Once you do something, in that process you might come across other people who might want to help you, and when you come across such people, you will realize with some people you might want to work for a longer period of time and they would like to get associated for it. Otherwise it's where extremely, if you just say, okay, look, I have an idea and I want to get associated with somebody, you will not meet anybody.
And sir, is it safe to say discuss your idea with an unknown person who is saying that he will help me out? So is it safe to discuss my idea with him or not?
Yeah, absolutely. I don't think that is a challenge. As when when I was chatting with Rahul, what is important is in the end execution. Your idea might be very common across 20 different people or countries and all. In the end, what matters is how you execute, and that's essentially the key ingredient or the secret sauce. You might be the first guy with the idea, but if you don't execute well, you will still not be there. Like for example, Facebook came in later. Orkut was there earlier. Nobody now knows Orkut, right? Everybody still knows Facebook. Google, when they came up with a search engine, they were not the first guy to do search, right? So in the end, what you are free. You should, it's okay to chat with people, brainstorm. When people know about your idea, they will poke holes into it, and those when they poke holes into your theory or in your ideas, it will make you think more on how can I make it right, and that's how from your idea, the thought of a product becomes more perfect. So it's completely fine discussing your idea with anyone, right?
Okay. And sir, one more last thing. Sir, if I don't have any kind of funding from my family or any kind of funding I don't have, so how to deal with that if I want to execute my idea? So how can I deal with that?
So at the initial stage, once you are convinced about your idea and your own conviction level is very high, and you are willing to give everything up, whatever may be a good job or anything, to do that particular thing full time, you will automatically be able to sell your idea and vision to prospective investors. It is very essential to give it 100%, right? You cannot be saying, look, I am working because I'm not fully convinced about my idea. However, can you give me capital to build this business? Nobody will give you.
Awesome. Last two questions. In fact, it is Nagajan Kumar, if I'm permitted, have pronounced the name correctly. Nagajan, you're online now. You can unmute yourself and ask your question. Introduce yourself and ask your question. Nagajan. Hello, Naganjan. Okay. I think he's also having some technical difficulties in, unmuting himself. Okay. So what I'll do is I'll just read out his question across. Naganjan is from Hyderabad. He's recently started a company called Start It Up, which is a team of 3 odd people, which is basically a solution for startups itself. It's directed towards startup. So the question is, many startups are not able to find their particular track. I mean, I think what he's trying to talk about is they're not able to figure out the strategic deployment of their idea itself. And so while they're helping their clients from a strategic point of view to make sure that they reach particular things, would Inflexor as a fund be interested in if there's some execution which has happened over there from a startup point of view to look at it from a funding point of view, or would that be a deterrent if it's coming from started up, for example?
So every opportunity is unique, right? Every founder and opportunity is unique. So there is you can't paint everybody with the same brush. So I would say one can look at it, but until unless there is a certain product market fit, as I mentioned earlier in my conversation with Rahul, we look for at least some revenues on a monthly basis, some paying clients to know what kind of product market fit has it achieved. So it's very important from that aspect.
All right. So what I'll do is I'll ask one last question because I've been quiet and I've not asked any questions to you, Pratip. One thing which I was very, very keen when I was looking at your portfolio, I saw that you guys invest into deep tech companies, right?
Sure.
And what constitutes deep tech? That's the first part of it. So this is for the larger audience as to what constitutes deep tech, and the second aspect of it is is there enough money being in the ecosystem for deep tech? Because one of the key challenges in deep tech is that the monetization or the revenue sets for deep tech typically come at a later stage because you're innovating. I think at innovation levels, what you have to do is you have to look at future revenue sets which are coming into picture, and for that I think there are deeper pockets which are needed, and that's where say more mature ecosystems like the States or even China for that matter typically invest in more on the deep tech side rather than India where more business model innovations are typically funded as we speak.
Sure. So as our early experience has been great. Has given us the confidence to do a larger fund. More than deep tech, we are innovation led and focused, right? That innovation might have deep tech implication, or it could have generic in and around us implication, but it is essentially innovation led. For example, Atomberg Technologies, which is an IIT Bombay founded company, Shivam and Manoj, their innovation helped in optimizing the power consumption of ceiling fan from 75 watts to 26 watts. Right? It's a huge saving of power. So for us, that was innovation more than deep tech per se, right? But again, it made a material impact on the way business and that category of product is being sold in the country today. Yeah. And hence, we backed them very early and they have been quite successful over the last 5-6 years. Similarly, if you see Bellatrix, which is an aerospace company who are into propulsion systems of satellites and rockets, again, it's innovation led. It is deep tech to that extent, more than machine learning. These are electrical, electromechanical innovations. which is effectively will be helping the rockets and the satellites to carry higher payload and having a much better fuel efficiency and a cleaner fuel, right? Again, for us, that is deep tech, that is innovation. We have a company like Entropic, right, wherein it's an emotion AI led company, that machine learning led deep tech enterprise, right? So that is purely machine learning automation led deep tech enterprise. But again, it's completely innovative in the way it is defining that category altogether. So deep tech has various meanings in different sectors, but essentially there has to be an underlying innovation IP, which can automatically act as a barrier to entry, or even if it is not a barrier to entry, it gives our company at least a 2-3 year head start over other competition who may come into it with large amount of capital themselves.
Thank you so much. I think we will conclude the session with that particular question. Thank you so much.
Thank you so much, Rahul and Esther.
Thank you so much for having and coming over, both of you guys. Any closing remarks, Pratip sir, that you would like to just quickly give across to the audience?
So, as I said, whenever founders and entrepreneurs want to raise capital, they need to think deep on why they want to raise capital and from whom they want to raise capital. That becomes very essential, and one should focus on building a capital efficient business. It pays in the longer run.
Of course. And similarly, Rahul, would you want to share some parting thoughts that you wanted to give across?
See, I'm somebody who's been a early stage startup employee at two places that went really big. I'll tell you, one of the reasons I stuck around as long as I did was because the founders of these places created a culture where we could disagree, our ideas were heard, and at the end of the day, we could all remain friendly, even if we had massive fights. So many of you who are starting out, I feel, as Pratip pointed out, the dynamic between the founders and the differentiation between what is professional and business versus what is your personal friendship has to be very clear. And as long as that works out, you will be able to build great companies.
I fully agree with what Rahul has said. And very early, when I used to be in Infosys in 2000 2002, NRN used to say, you can disagree with all of us without being disagreeable. That's very important. So you should have the ability to disagree at any point of time, no matter rank or whatever, but you should not be disagreeable. As long as that philosophy is maintained, the culture is maintained. I fully agree.
Concept of agreeing to disagree, right? So I think that's very important across the board. Okay, thank you so much for your time, gentlemen. Thank you for taking an hour out on a Saturday evening. Again, thank you so much. Just wanted to thank all our partners also who've been helping us out, reach out to fantastic audience base that we keep on getting on a weekly basis. That's about it. We will now meet 2 weeks after because we have changed the format now to a fortnightly function altogether. Thank you again. Thank you so much, Pratip. Thank you so much, Rahul.
Thank you, Nest.
See you guys.
Thanks, Rahul.
Yeah, stay safe.
Thanks.